Hello everyone and welcome into the channel. My name is Brent with Investing on the Go. Today we're going to be covering the Sofi Investing Challenge Week 29, Tiny Deposits, Real Growth, Full Transparency. A quick recap, we started this portfolio back in May of 2025, depositing $25 every single week with the goal to hit $1,000 by the end of 2025. Now we're well on our way to hitting our goal. We could have this Christmas rally here in the end of November, highly unlikely, but we have Christmas and December coming up, which is why I have the snowman here. Now, we're at the beginning of this video, we're going to go ahead and cover the markets, take a look at the S&P, NASDAQ, and Dow Jones over this past week. Then we're going to be diving down individually into 6 companies, part of the Mag 7, that I'd like to take a look at, whether they're trading near all-time highs. Probably not near those 52-week lows, but a pretty good opportunity. But then we'll be diving into the performance of our portfolio over this past week and just seeing how much closer we are to completing our goal. So with that said, if you guys are brand new here to the channel, definitely go down below, subscribe, hit that thumbs up, would really appreciate it. If you guys would like to join the Discord server, it's completely free. There is a pinned comment down below where you guys can join the Discord. There's a few of us in there if you guys would like to join in some of the discussions. I like to pop in there and post some things over like the week or the day, things that's going on. And if you'd like to share and have some fun, definitely join in there and let's chat about it. Okay, let's go ahead and get into the video. Okay, so as far as weekly performance snapshot, here we have the weekly performance for the 17th to the 21st of November 2025. This is the 3rd week of red in a row. Now, we actually bled off quite a bit here going into Friday before I did have a couple little things in here. So S&P 500 this week went down 1.92%. Then NASDAQ bled off a whopping 3.09%, and the Dow Jones 1.96%, right? We have continued bleeding out there in the market. It's beginning to amplify with that fear. We see down here really quickly kind of jumping down to the fear meter. But last week when we made our video, the fear meter was at 22. Now this week, as of when I'm recording this video, it's at an 11. It did hit a low of around 7 midweek this week with really high concerns. I did want to also include that VIX in here. We can see the VIX kind of spiked here end of day Thursday into Friday morning before coming back down a little bit. But we can see the exact same motions here. On Wednesday, market was kind of feeling kind of down, wasn't sure what was going to happen. After Wednesday closed, earnings came out for Nvidia and a few others. That had a huge gap up between close of Wednesday and open of Thursday, where the market had a nearly 1.5 gap up. I took advantage of that early on in the morning, made a whole video on that, how I sold out of a bunch of my shares for SPY-I, QQQI. I sold off at near the top, and then I didn't quite time the bottom, but I did buy back in, saving myself thousands of dollars and increasing my future dividend income and stuff. If you guys would like a deeper dive into that, I'll have a video in one of the corners here. You guys can check out that, or if it's not there, just drop me a comment saying, hey, you forgot it. On Friday, after Friday, during Thursday, we had the morning job report come out saying that the unemployment rate had risen unexpectedly and the U.S. economy had lost jobs in August for the 2nd time in 3 months. The market bet the Fed could be forced to lower rates next month to give the labor market a needed boost. So there was some midday there, right? Thursday, the market started to kind of go lower due to the job reports number. Then we had on Friday, I believe this was Friday, the earlier bounce. So on Friday, there was a bit of a bounce here. That was the New York Federal Reserve President John Williams said he came out supporting that lowering the near term interest rate, giving traders hope that they can get a December rate cut after all. So I believe there was a roughly 27-30% chance that we would get a rate cut during the next Fed meeting here in December. And that he came out saying, yeah, it's looking like due to the data that's out there, we could get a rate cut coming out in December. And the percentage changed from around 27-30 to now 70-77 in that range. I haven't checked it today, but it's well up there. It's back to where it was previously at after their last announcements of such. Other notes here that I wanted to include, right? We already know about the tech sector volatility. Valuation concerns the market's been heavily reliant on small groups of mega cap technology and artificial AI stocks. Investors grew anxious that stock prices for these companies, particularly Nvidia have run up so far and are overvalued. This led to a significant sell-off across, QQQ and SPY, and it continued on to this week, right? We did see a little bit of recovery here, but it didn't hold. The whole market at S&P, Nasdaq, and the Dow Jones blasted right back through that 50-day moving average, continued flying lower until this kind of news from the Fed and such kind of came out. Again, we're going back interest rates and inflation uncertainty. Markets reacted to mixed signals from the Federal Reserve officials earlier in the week, right? Earlier this week, they came out suggesting that there would probably not be any sort of future interest rate cuts coming out in 2025. But then on Friday, okay, so it was Friday when John Williams came out, kind of shifting it back. Yes, we're going to be doing a potential rate cut due to fresh data that came out indicating a weakening labor market. So that's kind of the slush slosh of the week, right? It was a very, very interesting week to be watching and kind of seeing how the market was reacting to news. And yeah, it was just an interesting week. It really was. Here we have the weekly. This is from thinviz.com. We saw of the Big Mag 7. Microsoft this week went down 7.46, Nvidia 5.94, Amazon 5.96. We had Apple essentially flat on the week, negative 0.34, Oracle down 10.81, Palantir down 11.01, Tesla down 328, Meta down 250, but Google McDougal out there up a whopping 8.41%. I believe we're the highlight of the week this week, it looks like. So very much in the green on the week. So congratulations, Warren Buffett, on that purchase there. Now, I wanted to go ahead and cover 6 companies here, starting with Apple. Well, we have Apple, Amazon, Google, Meta, Microsoft, and Nvidia. So Apple, as we said, this week they basically traded flat, right? There was a little bit of loss, but they're essentially trading at all-time highs. They're priced at $271.49. They're still trading well above, well, less than $20, but $20 above their 50-day moving average, quite a bit of high, like $50 or so above their 200-day moving average. Their PE ratio here sits at a 36.4, which is still pretty dang high for Apple. Although it has came down from its September highs of around 38, 39, it's still pretty high. Well, I guess in comparison to earlier this year. Earlier this year, it looks like PE ratios were in the 37, 38, so it's a little bit cheaper than it was this year, despite price being higher, near all-time highs on the year. Amazon is on its way right now, heading towards its 200-day moving average. This will be an interesting to watch. This is why I kind of put, it's getting really close to that 200-day. Amazon's one of those companies you're going to want to take a look at. Is it going to hold at that 200-day moving average? You can see that there are instances in the past where the price comes down, hits that 200, hits that blue line, bounces back, hits that support, bounces up, kind of does the same, doesn't quite come back down, hit that 50 or the 200, and then retracts. Here, once again, it uses that 200-day moving average as some support, bounces back a bit, looks like maybe mid-October, early October, or end of September. Now, Amazon did actually crack below that 200-day before rallying and heading from what looks like 214 to 255 before coming back down. Imagine trying to buy into Amazon all the way up. You're buying up here, and then it falls a whopping, that's a big drop, right? That's a quick spike and then quick drop off. But I would look at Amazon this week or going forward. Does it hit that 200-day and find some support, or does it break on through? That could show weakening in other areas of the market. Or if it bounces off that 200-day, moves higher, this could be a good sign to be buying out some Amazon. Google is essentially at all-time highs. There has never been a higher price for Google out there. As of close on Friday, it is at $299.65. Back during that dip earlier in April, May, right? Google was trading below $150, right? It was right there. For a smidge, you could buy Google for $150. So you could get 100% return all within the year of 2025. Like if you bought in during that low here in April, during the tariffs announcements and such, pat yourself on the back. You did an amazing job. But essentially, Google is not one that I would be diving into at this time if you're looking for any sort of what's it, some sort of discount. Meta on the other hand, it is trading near the beginning of the year 2025. You can see here, open 2025 in January. It kind of closed end of January 20. Oh no, going into 25. So going into 2025 January, you can see I drew the line here. I just went straight across. You can see that on the 1st of January, 2nd January, it essentially was priced at the exact same price that it is today. Meta has a PE ratio of 26.26. It's blasted right on past its 50-day, right on past its 200-day, and essentially reset itself for 2025. I myself am a shareholder of Meta. I've picked up quite a bit of shares of Meta, over 100 shares here during this dip, and I'm just kind of holding off on the side. I collected my shares. I'm going to see where these end up going, whether they continue to trade down lower, where they were during the tariff announcements, or if there's some recovery in the short term. I'm not worried about anything in the short term. I just picked them up here because look at where these ones were trading here not too long ago. So yeah, disclosure there, I do own Meta. Microsoft here. Microsoft is on a way similar to Amazon, right? Similar to Amazon. It's getting close to that 200-day moving average. It's not something I've seen too often here in 2025 or even beyond. You can see here there was that death cross taking place earlier in 25. We talked about Microsoft back in January, February. We saw the death cross. We saw Microsoft kind of bleeding off really heavy. We didn't know where that support was going to be. I think it's been a while since we've really chatted about Microsoft, but this is either going to hit that 200-day moving average and gain some support, or it's going to continue to blast on through there. But you can see Microsoft's PE ratios at a 33.59, which is still a little bit more expensive than from some of these other ones, such as Amazon, Google, Meta, right? But it's still a little bit underneath Apple and Nvidia. I'm just really surprised Apple's up there, but here's the one that everyone had concerns with, which is Nvidia. Nvidia's priced at $178.88. It's recently fell below its 50-day moving average. It's still about $26 above its 200-day moving average. They did have really good earnings this week. They projected going forward they'd be even better. So while they do have this sell-off happening, I think it's a little bit overblown. I've had friends, I've had old coworkers reaching out to me. I had my brother message me yesterday asking me about this AI. Is this AI thing overvalued, right? When you're looking at chip producers, you really only have AMD and Nvidia. And if you're looking at AI as the beginning infrastructure piece going forward, you need to spend on infrastructure early on to get things working and growing. This is something that, working in IT and in infrastructure for the past, that's what I did in the past. We would always have to order a lot of equipment up front. It's the IT department, it's AI. It's not something you can ever underspend on early on. You have to pay for the support, you have to pay for the engineers, you have to pay for the equipment. That is all capital expenditures up front. You have to build out the infrastructure to support what is going to be built on it. So everyone that has fears of over these are we spending too much? Are we going to get some sort of return from this in the future? That's what everybody says about the IT department. If anybody out there works in IT, it's always the underappreciated department in any business. They're overpaid, they say. They're overpaid department. They are never doing anything, but when stuff hits the fan, they're the first department that's going to be reacting to trying to fix that problem, trying to get that business back up and running as quickly as possible. And I know really early on, just as an example for myself, back when I was working in IT here recently, we had to spend millions of dollars to replace our Cisco equipment because it was end of life. New firewalls, new gateways, new switches, new equipment for security, and it just costs a lot of money. And we had everybody come in from different departments saying, hey, do we really need to be buying up this equipment? Well, if you want the infrastructure to stay in line and be ahead of competitors and be ahead for safety and to not prevent hacking and all this other stuff, right? You need to spend money up front to get all this infrastructure in place. Then you can begin to tweak it, you can optimize it, you can get that golden config, and then you can begin to just really, as you say, optimize and move forward from there. So I think that along with other companies, you really have to spend pretty big in AI, in the infrastructure to go win. Then you're going to get a whole lot of people to optimize it, and it's just going to get better from here on out. So that's my feeling on it. So I think that the Nvidia sell off here is kind of overblown, and while it does have a really high PE ratio at 44.3, it's still far away from its 200-day moving average, around like 26 bucks, as I said. But if you're going to be building out this infrastructure, who are the companies that you're going to be turning to for the chips, right? It's going to be Nvidia. So yeah, that's my take on it there. Now, if you guys would like to start your own investment journey, you guys can get started with this $25. You deposit $25 to your SoFi account. You get a bonus of $25. If you'd like to set up over on Public, there was a bonus for Public. You deposit $1,000, you get $100, right? That's a pretty good bonus right there. There's other platforms as well, from Webull, Robinhood, and a few others, right, Moomoo? I know those are the pretty popular ones, but you guys can also sign up below to get my free investment tracker. There is also the $0 budget that's completely free down below, so check out those goodies. Now, jumping into my week 29 progress update within the SoFi platform, our base investment jumped $25. So I just went ahead and deposited $25, sticking to our plan. We moved our base investment from 809 to 834.43. Our previous weekly balance, this is capital gains and all that stuff, was $864.24 versus our current week balance. We're sitting at $875.07. You can see that during this past week, this portfolio took a pretty good hit. We're down 1.92%, or roughly losing $17.07 in this account. Now, this is not the biggest hit that we've taken, but it's a pretty good sizable amount. Our total return fell down to a 4.66%, and our total return capital-wise that we've made in this account is $40.64. That's the total gains that we've made within this account since opening it back up in May 2025. We purchased 0.04059 shares of VU this week, bringing our total share count to 1.44129. Our current goal is 2 shares of VU within this account, which we're 44% of the way there. I think after I hit $1,000 on the SoFi account, I have something else planned that I would like to work on that will not be using SoFi or Robinhood. I think I'm going to be using Alpaca. It's a platform you can invest. You can use API to do different kind of coding with. So this is something I'm going to be kind of changing it up a little bit, maybe discussing some of those trades and buys and such, but we'll see when we get there. It's kind of a work in progress in my head. So that is the progress report right there. If you guys have any comments or questions for me at any time during the video, like, hey, I have a question or comment about something specific, you're thinking about something in your head, just drop it down in the comment section below. I would really appreciate to get some guys', some of your feedback on what I discussed about AI. Do you guys agree that the AI department is usually the underdog of departments in the companies? I know there's a bunch of you guys out there that work in the IT department. Now, our progress towards our goal, as I said, our goal for 2025 was to get this portfolio to $1,000. Now, we could obviously deposit $1,000 into the account, but I really want to showcase just how powerful $25 every single week can become. So we're sitting at $875.77, which makes us 87.51% there towards our goal. I also wanted to include here the total dollar change since we've started. You can see here that back on week 27, a couple weeks ago before the fall of the market, our total return in this portfolio was sitting at $54.89. It's pulled back now to $38.90. So it's been a pretty big pullback these past few weeks, just kind of pulling. But eventually the market will bottom out, find some support, realize that everything is being oversold because there's only so many companies that people can go to for these chips. They have to spend money in infrastructure before they can optimize and build on it. It's just like anything out there, looking at this the way it is. But that is going to be it for today's video. I really do appreciate everyone tuning in and hanging out. If you guys have any comments or questions for me about the video, other ideas for future videos, drop them down in the comment section down below. Also, do not forget to subscribe, hit the bell to be notified every time I release a brand new video, and hit the thumbs up. And that is it for me. Thank you all for tuning in. I will catch you guys in the next one. Bye-bye.